pension fund update report with fund balance, and also the VAC update. We've talked about both of these in the past, where the levy amount is not meeting the current needs, and as you can see, some of the trend that we have depleted some of the available fund balance, and we're getting to a point where we have to stop the bleeding, so to speak. Behind the scenes, I've been working on this for quite a while, trying to figure out a way to do that. This year, through the current tax levy, and although that number is still not final, and Mark may be able to say when that number will be final, or maybe Bruce is here when we'll know for sure. But we did move the VAC approximately $30,000, so we cut the what deficit they've had in the past in half, and we should be able to do that again next year, and hopefully get them to a a total break-even part, and then keep the fund balance that's available there for its purpose of getting them through a cash flow basis of this early tax, through the tax cycle and the like. And the pension funds, getting to the point, as you can see, as the cash flows before the tax cycle, it's getting to the point where it, we'll have to borrow to stay ahead through the tax cycle if we don't, do something with that. So I have two ideas on that. Well, first, the colored chart that's a couple pages through there after those two reports shows the tax levy distribution, and I did not put on there Kankakee County, but this is our levy. This is not the entire tax bill that goes to a resident. So I want to make sure I clarify that. I was working on it, as I know I'm working on it, explaining to you that it's ours. So this is our distribution. With the cap funds, a pie chart is a good indication because the pie is only so big, and if you want to switch around fund to fund or do some different allocation, you rob Peter to pay Paul, so to speak. You change the distribution. And looking at this, and looking at the distributions and what they're for, it becomes pretty evident that the corporate or the general fund is probably the one that we're going to have to tap, with the size of the others and stuff. So, and that's what's been rather difficult as we're talking about the general fund and all the other issues that are going on. Now we're talking potentially. We currently have about a $650,000 debt going on annually with the pension fund. We've identified that $225,000 we're going to start moving from the inmate program to reimburse those benefits that are applicable to pension from that program. And then I've identified two, well, they're loans, but in various. We have two ERI loans, early retirement loans, the payments that we're making right now, both out of the pension fund from something that happened 10 or 15 years ago. I don't know exactly when it started. And that's currently $102,000 a year that we pay. Those two expire in 2010. If we chose to pay them off, it'd be about $276,000 to pay it off, and it would save about $35,000 to $36,000 in interest, depending on when we did it. So that one would cost us $276,000 to pay it down, but we'd gain $102,000 a year, in budgeting, type of scenario to try to bridge that gap. So, Evan, because of where that one's at, may or may not, it doesn't make a whole lot of sense to do that, other than you're freeing up the budget. We could continue, to do that for a few more years. The other one that you have a copy of it in there, that I would suggest that if we're going to look at the general fund, I found this one. It's a National City loan that we have had for the last 10 or 15 years. It's due to expire in August of '09. I put a phone call in to National City, double check the rules and regulations on this, and unfortunately, they didn't get back to me, but my idea is this, and we don't have to decide or make any motion today. It's an idea that again to move forward. Is this is annually $225,000. If we were able to pay this down, let's say in October, November, you know, early out of the general fund, let's say 200,000, 180,000, as you can see where the outstanding principal is at that time, November of 08. We could free up $255,000 of budget that's currently going out to pay the payment. If we take all three of those together, that would all but cut out the pension fund's deficit of all but $68,000 if we did all three of those. So obviously it's a moving target. That's close. You know, we may have to look at some other things, but that's a whole lot easier number to go catch than 650,000. So I bring this. You know, I'm working on all the details. If you like the idea, I can bring it back where we can really, take a look, and then obviously we're going to have to plug it into when we do this and how it's going to affect general fund to pay it down in order to benefit that 09 advantage. But I wanted to get your feel for like it, don't like it, so if we continue on this and into the 09 budget process, as we plan and move ahead in this. So I was open to see, what you thought.
Mr. Foss.
Thank you. Just explanation again. Okay, this amortization schedule we're looking at, that originated for what purpose? And the payments are now coming out of pension?
The amortization schedule that you have are coming out of the general fund.
It's the general fund?
There were building improvements and the like.
So it's not related to pension?
No, it's not related to pension. It's
energy improvements.
Yeah, it's a budgetary, it's a general fund budgetary option if we have to shift the levy of the general fund to help pension. If we have to accept, if the general fund accepts less levy and pension accepts more of the pie,
yeah,
then we would, where is the general fund going to absorb what it's transferring to pension, so to speak. And this was an option to cover that budgetarily as an option. So that's where
and then the other debt you mentioned on the chart page. You mentioned a lump sum payout of $276 would take care of an annual $102,000.
That's within toward itself. That's the ERI, it's an early retirement incentive that the county did in the 90s. I don't know exactly when. And then we're paying the IMRF back for doing that.
Okay, so it's a debt with IMRF.
It's a debt with IMRF, correct.
It's not in their rate they quote us. This is a separate.
It's part of what we pay them. I mean, it's calculated, but that's the $102,000 is what we annually roughly pay them a year.
So it's in their calculations when they give us a rate.
Yes. Yeah.
So if we pay this off, we could reduce our rate with IMRF.
Yes, it would have a.
So
yeah, that's hard to calculate what exactly
sure.
that part. Yes, but it would have a double effect technically. It was part of the the 5 or 6 pages I gave you last month. That was the ERIs were part of those funds. Those two are actual funds at IMRF level. That would be an internal pension adjustment. And then the other. The National City loan, I only printed the last page. If you'd like the full information, I'd be happy to bring it. I just showing the relevant timing of this, with the budget. But it started back, I don't know, 97, 98, 99 area. Yeah, somewhere in that area. So we're looking at a total, shifting, and then looking at trying to help, both budgets, as far as general fund and pension, to try to balance it out. So that's the idea.
What Steve's doing is proposing some strategy moves here to work on this pie that we're constrained to. And so by making a couple of strategic moves here, we can help our position at IMRF.
Well, and as if you remember, we have 30, I think it was 35 million, if I remember right, of reserves on IMRF side, but we cannot tap that from the payments perspective. You know, so we still have to identify getting the payments to them. And then they keep, you know, I get, you know, all the statutes and rules, we can't ask for help with that $35 million, you know what I mean? That's there for future use. So we have to somehow manage to get the payments, you know, to them one way or the other, and that's really what we're doing. The other information on the state website, as far as there was legislation that was moving last year that has not done anything as far as, you know, the SLEP enhancement is really the one of the things that have changed us a lot. Where the state was looking at helping what they voted, it doesn't appear to maybe have any movement in it. So we're pretty much on our own to figure it out at this point. So,
Mr. Frechette, did you have a question?
Steve, what's the interest rate on the loan at National City? I don't have a number.
5 1/4.
I don't know.
yeah, 5 1/4.
5 1/4.
Thank you.
So, any other questions?
Any other? Mike? Mr. Bosco?
Yeah, as far as that bank loan, yes, if we're paying 5 1/4 and earning 2 right now, or whatever, Mark, would make some sense to probably pay that one off, free up some funds otherwise. I'm curious what the internal rate is on that IMRF debt.
I don't know if that was on that sheet. I have to look last month that we passed out. I don't know if that's listed or not. Yeah.
Here's Mike.
My personal opinion is, I'd like to see us pay both of them. I think it'd be good practice. I know that we're strapped, but I think we can see the way we keep the funds together. I think we can do that. I really do.
I think we need to wait till later in the year when the tax cycles go through,
Yeah, I think we
you know, where we
could. But
get
I
that
don't have
flow.
some good news with that.
Okay.
So I like the idea.
Okay. Well, I'll continue to work on it, make sure I get all the details, you know, and we'll discuss it again, you know, later.
For the record, Mr. Frechette, just so that he endorses the idea. Just to get it on tape, all right?
Just a good news meeting.
Any other questions?
Any other questions at this point?
Kind of leads in, maybe I should have started with the calendar first and the timing of the paperwork, but one of the last sheets on that first group, the very last page, I believe, sorry, it's a lot more confusing when they're back to back, I know, sorry. Is the exact calendar that we've used the last probably 4 or 5 years. I just changed the date, or the year, fiscal year '09. You know, we're early, we usually discuss it in May. So if you'd like to, you know, I guess, or Vicar, you requested this, if you had any
Right.
ideas or wanted to suggest something.
What I want to do is reinforce it as much as possible what our schedule is, so that you're prepared when we come into meetings and can think ahead a little bit rather than have something just land in your lap. So this budget calendar is something that I think all members need, and we probably need to pass it out to every county board member so that they are prepared and know what's on the agenda and know what will be coming up and get their input. They can appear before the committee, get their input, and so that's the reason I asked Steve to put this in your packet today. Everybody has a copy, and we'll keep reinforcing that. These are the moves we're going to make as we go down this budget path. Any other questions?
Yeah, GIE would be next. Every year I receive the notice about this time of year and bring it to see, which we're going to continue. What you have here is multiple pages. Let me explain that the letter, without reading it, is basically an early notice of renewal and the projected premiums. I included last year's letter of projected premiums that we received last year, and then I also copied the actual declaration when it came in. And you can see that it changed quite a bit, and I understand that we're currently going through the liability audit, because that was the one that adjusted the most. And from a meeting that John Snyder had with GIE with some of the liability risk issues, and I think over training things and stuff, there was the graph. Sorry that I copied the colored graph and that's how it came out, but it's basically, the legend is exactly the way the legend is, it's the way the bars are. So you can see, if I understand it right, the liability goes over your last 2 years. So I believe that's probably why the premium went down the way it did, because obviously we've been improving in liability exposure and claims count, et cetera. As the claims committee, having John Snyder on board as a safety manager, I'm sure that other department heads and everybody has done their part there. Whether it'll go down from this thing, I'm assuming it will, but we don't know that sometimes till after the audit is finished. But I just wanted to bring this to you, as FYI, if you want to do anything different than what we've done in the past here. So it's an update, I guess, FYI information from what I know right now.
Mr. Boyd.
Thank you, Mr. Chairman. At this time, I would ask this committee to table this matter so that my office can look into it. I requested information, did not get the information I requested. I am not satisfied with the services we're receiving from GIE, and will be asking the county board to consider an open bid situation with regard to this. So at this time, I'd ask this committee to table this matter so that I can discuss it further with your finance department, your chairman, and probably yourself as well, Mr. Chairman. So if you would entertain that motion, or if the committee would entertain that in motion form, I would certainly appreciate it.
Is there a motion? Mr. Lear with a motion to, you want to table it, or you want to table it? And I'm looking for a second. Mr. Galecki with a second. All in favor signify by saying aye.
Aye.
All opposed, like same. Motion carries. Subject is tabled. Mr. Staudenberg.
I was going to make basically the same comment. I would like for, Deister Gilmore here to look at other options, because I've found in our industry there are some competitive people out there other than Bliss McKnight for these services. So.
Thank you. Okay.
Well, it's not on the agenda, but Mr. Vickery asked me to bring a copy of this. Do you have a copy? It's a news, I think it was separate. I get this every month. An email every month. We'll be online to get it. It's actually the March CPI index. I don't know if you've probably heard about it, but this is the Midwest version of it. Well, I guess it also shows the United States average, and the Midwest region, and then Chicago region, Cleveland region, from Ohio. So have a specific, if you wanted to link to it, or
Yeah.
well, we use it internally when we budget. We'll watch fuel, motor fuel issues. As far as it also, excuse me, utility types of issues, and try to when we're budgeting. It's also a source that we've used 4 years ago when the county purchased the salary survey study. Their recommendation was to use the Midwest, CPI used to watch, when you're, as far as when things are adjusted, both salary-wise, and then I also use it for utility costs, fuel and things like that when we're doing budgeting. So a tool, maybe, some of you obviously probably know it's out there. Others, maybe you've never seen before, but you've heard about it. So I just printed one off. This is the latest one through March. So.
This is the figure here, right?
Yeah, that would be this. Well, that is well, that would be
change from
the Midwest region as far as wage. It would be 4.1.
I see.
So yeah, we've used the Midwest region when we've done it, when we moved the tables and stuff, so.
So we're showing 4.1
We
for
see that
CPI.
roughly right now. So change.
Is what the government said. So it does plug into what we need to do on budgets and stuff, so I mean, that's why I want that information. That's why we want that information brought forward to the committee. Any other questions for Steve? Hearing none, we'll move on. Thank you, Steve. County Treasurer's Office, we have in your packets, as always, we have a county treasurer's report and a county collector's report, and no monthly resolutions at this time. So I'll need a motion to pass the county treasurer's report. Mr. Washington with a motion, Mr. Colecki with a second. All in favor signify by saying aye.
Aye.
All opposed, like sign. Motion carried. The county collector's report is in your packet. Motion, Mr. Lejes,
Monday
Mr.
to
Wilson
Friday.
with a second.
Thanks,
All
sir.
in favor signify by saying aye.
Aye.
All opposed, like sign. Motion carried.
Yeah, I meant to, I forgot. I had to get going on
Well,
that.
no, your comments are important here. Come on.
No, they're not.
We need your,
Give us the bad news.
You're not gonna wanna hear from me.
We don't want bad news today. This is a good news, happy meeting.
Oh my, I wish I could.
Don't cause any waves. Yep.
The assessor hasn't rolled anything yet to the clerk. Last year was done March 16th. I really don't know what else to say. I'll probably be here next month asking you folks, and I want you to think about this. What, if anything, we want to do with the due date on the second installment? It's set by law to be, it's in the statutes, June 1st, September 1st. The June 1st, I hope, will be middle of July. I don't know. You know, the taxpayers won't mind. You know, they don't.
Second one they will.
But here's what I want to tell you. FYI, just the later they get mailed, we budget $500,000 to $600,000 in delinquent interest. That isn't going to happen. I hope you understand why. We have less money to collect. You have less interest to collect. Unless we delay everything, then you get. What I want to do, if we do send them out middle of June, hopefully, what I do have, which won't be much, I will do a distribution July 1st. I'll stop the presses, won't post anymore. We'll just distribute what we can. That's what I plan on doing now. So I'm sure I'll be here next month with where I'm at right now. So, does Bruce or Steve want to clarify anything? They really know more than I do at this point. I have everything I need to get going. And we'll do what we have to do to get them done ASAP, around the clock. So, Bruce or Steve, if you'd like to say anything.
Any questions?
number 14, Mr. Clark.
Any questions or, you know, we don't have the, as Mark said, we do not have the assessed value figures from the assessor. That's running about a month late. We will move the process as quickly as possible without sacrificing certainly any accuracy, but the only potential problem would be if there's a multiplier added by the state after the final abstract is sent, that could conceivably delay it more. So.
Mr. Beatty.
There were some delays with the tentative with the state. Right now, in fact, we are in the process of rolling. We've been working on that this week. They do have the tentative. We've gone through all the numbers with board review. That's closed, and we're closing that off. And by the end of the day, we'll have everything pulled to the clerk's office. going over the numbers on a preliminary basis, I don't anticipate that there'll be any statewide multiplier, countywide multiplier issued by the state. So I don't think we have to worry about that. We can move forward with the levies and take care of that.
Any questions? Mr. Stoddard.
Mark, are you suggesting if we send the first one out late, we postpone the second one? Is that what you're saying? Or can we even do that?
Well, I don't, well, yeah, you guys can do anything you want.
Not exactly.
Well, with the due date you can, but I know that some counties, well, Jamie's here, no, you can't. No.
That's right.
I know that some counties have had both installments due on the same day, down south. I would be barbecued.
We'd all be barbecued.
So, just think about it. I mean, we're in this together, I don't want to make this decision on my own.
No, we're not.
I have no problem with July 15th, September 2nd. People know it's coming, you know, they hopefully budget every month. We do give the seniors a 10-day extension on the 2nd, so just, please, just something to think about for right now, because I don't think I'll be any further now mailing out next month, at the end of May. So just think about it, just give me your thoughts. Because I've been here 25 years and we've never ever mailed them out this late, ever.
All righty. Thank you, Mark. Mr. Lear.
I noticed Mr. Beatty is here. I wonder if he could share with the committee an item that came up in community services in regard to exemptions and deadlines on exemptions. Not all members of this committee are familiar with those changes. Could you speak to that for a moment?
This last year, there's two different things. One, there are some new exemptions having to do with veterans and also with disabled. So it actually became law in October. Department of Revenue got forms figured out in December, and we extended the time of taking those as well as all other applications to March 31st this year. The deadline that we have for 08 will be the 31st of December. One thing that we're kind of transitioning towards, in the past there are certain exemptions that are provided in the law. That's, for example, the senior freeze has July 1st or a time set by the county. The law isn't real specific whether the county means me personally, board review, county board. Some of the exemptions, it just has to be determined by the county. We have not enforced a deadline because we've never set one. When I say we, that's my office, townships, county, in any form. We've been transitioning towards having a December 31st deadline on all things. There's no confusion as to some being July 1st, some being other dates. What Mr. Lear's talking about, to inform all board members and everyone, as we're transitioning through that, we've been doing it, all applications say December 31st. Applications will be available in the next month or so online. Those all say December 31st. One thing that is bound to happen as we're transitioning through this is that there will be people that have been in the habit of filing months late when they get their tax bill. What that creates is 200-300 C of E, certificates of error, that are not errors in fact as clerical errors, something fell off the computer. They're, for the most part, people that just, I didn't get around to it for a year, and now I'm showing up because all of a sudden I realize, now the tax bill's here, what that means. We're trying to minimize those. What that has meant in the past to the county is that there have been $200,000-300,000 actually returned after the levying point that the clerk's office does. To the county government, that's meant about $20,000 a year that we give back almost entirely because people just forgot. And since there hasn't been a deadline established in any way, there hasn't been any way to enforce a deadline. You know, as we've been transitioning through that, this year it was March 31st, this next year it'll be December 31st. In doing that, now is kind of crunch time. We quit taking applications for '07 March 31st of this year. We've had a couple of people that have come in and said, I'm here to do it, I just got my taxes done on their senior freezes, and they're thinking this is the normal time to do their '07, and it's really the normal time to be doing '08. We've got a couple of people that we've said, you know, we missed that deadline. What Steve and I, Mr. Lear and I have talked about is informing the public. We've done that talking to realtors, talking to title companies, talking to veterans groups, talking to disabled groups, trying to get the word out, and we'll continue to do that. There have been things in the paper as well, both coming from the state and from our office. Some of the townships have advertised that. In the next couple of months, and certainly through the tax bill, is the time that some of these people that have maybe for the first time, or maybe just because this is the habit they've been in, are going to be finding out the consequence of not filing timely. They had 15 months to do it, and now as the tax bills start to roll out in the next little bit, there are going to be some people that are probably going to come to a county board member and say, hey, look what happened to mine, it went up a bunch. And the answer is that they didn't file timely. And transitioning through this, there's bound to be a few of those out there. We know that we have more filed this year than we have other years. And that could be a combination of things. Hopefully we've been doing a better job on outreach and getting people signed up. Some assessors, township assessors, have been sending out letters, been making phone calls. So I think outreach has been better. But I'm sure there's going to be some people that somehow got missed, ignored letters, ignored phone calls or requests or reminders. And as we're trying to do this, one of the things that I shared with them is that if we have a deadline, we really need to stick with that. And already I've heard a couple of sad stories, true stories, not just sad stories somebody's making up. And we're bound to hear some more before this is done, but to be fair and consistent, we really need to, there was a deadline, it was notified, we're going to move that deadline up really to where it should be this next year. We're going to continue the outreach, getting the word out. I'm sure there'll be some people that, having missed it once, will make sure that never happens again. The ones that it'll hit the hardest might be somebody that's had a senior freeze for a number of years and are going to lose that for this 1 year. Now, the good news is, getting filled out for '08, they will recapture that original freeze level that might be back as far as 1993. So it's not a matter of this setting them way back and them starting all over on a new freeze level. Any questions?
Yeah, I guess. You're saying if a senior freeze is missed or not applied for or disqualified because of income, the next year they qualify, they will go back to their original freeze level?
Right.
That's not what the instructions say at all. And it's not been the practice.
Oh, yes, it has been the practice. And it is, and I believe it is statutory. And I've
Will you
talked
reset at the new level on the year when you reapply and get reestablished?
No,
No need to
if somebody
sell.
makes too much money, which this year goes up to 55,000, they do not qualify for this year, but then next year, maybe this year they took some money out of an IRA or something that bumped them up there, and next year they don't have that, their original freeze level remains in effect. I believe that's the way it's been practiced. I believe that's the way it is in the statute, and that's certainly the instruction of the Department of Revenue.
I would say, all these exemptions, okay, I'm in this, kind of in the business, and I'm confused about these exemptions. Are the new exemptions on for this year, for this tax bill coming out?
Yes. The new disabled
Disabled and veteran and
veterans, returning veterans.
the larger amount for seniors and homestead.
Correct.
Until we do a better job of outreach and information getting out to the public, I'm sympathetic to extending deadlines. At some point, yes, you have to cut it off. I constantly have people across my desk in my business bring in their tax bill, they do their income tax, and they're missing senior free or senior homesteads and basic homesteads. And well, where's, well, they didn't know anything about that. What are you talking about? Well, you gotta go apply for it. And, I don't know if it's gonna take a mailing and it goes in with the assessment notices or some such thing to lay all these things out. I know we think that everybody's fully informed, but people don't understand their tax bill at all as it is, and this is just another complication.
Our township assessor sends out a letter.
Ours doesn't, see, that's not uniform, and that's the problem.
But our township assessor, I get a letter every year. Mr. Washington.
I'm in agreement with Mr. Bossert on not being so direct at this point in time, because we do not have a uniform way of informing the people, general public. And I believe that we need to give them that time and get a uniform way, set a uniform way of notifying them prior to cutting down and saying, well, you just missed. These are the people, many of them are the ones that the least ones that we should be cutting back on, because they have the least amount of income, they have restricted incomes, they are not able to meet many of their own obligations as of now. So I'm not in agreement with doing an immediate cutoff on that.
Well, I think, to be fair to everybody, it's probably an educational process, because my township assessor sends me a letter, and if I don't qualify, I just throw it away. But we need to get, because we have to keep the process moving. Mr. Beatty has to have cutoff dates to make the process work.
I understand that. What I'm saying is, there isn't a balanced, even way of notifying everyone at this point in time. And cutoff date or not, that is not a fair way of doing it as far as the people are concerned.
Mr. Stopper.
Why don't we find out what assessors do send out a letter and what don't, and let's ask them to do that.
A uniform letter.
A uniform letter, so that we can be assured that everybody's getting notice that they possibly could get an exemption.
Mr. Boyd has a comment.
It certainly is a novel concept. I would warn against expecting compliance. You have no authority over the township assessors, nor
They're elected.
my office would like to get some uniformity out of the township assessors as well. And we don't have it. And to be quite honest with you, exemptions and timing of exemptions and notification to the public is the least of the worries for the county when it comes to the manner in which the assessors behave differently. So I certainly think it should be attempted, and if you're successful, then I'm going to give you my list, and maybe you can get the same things out of them that I need.
Is it possible, Steve, for the county to send it? What's a mailing cost?
I guess I'll, for the moment, stick to the things I think are appropriate for the finance committee. Right now, by doing this, we would minimize $20,000 that we're missing out on after the levy. So by moving it up, we're going to close that gap. So there's a 20,000 plus side. On the other side, as far as potential expenses, right now, when we send out our annual letter of change of assessment, which is every 4 years going to everyone, and any other year that there's a change, in that letter, it mentions what they are, and it gives them statute citing. Part of what we're doing in moving more things to the internet is so that people can find that information. And so we're doing some outreach that is either already in a mailing that we're doing, putting it online, having outreach where realtors and other organizations are spending their money to get the word out. Myself showing up at some meetings, trying to get the word out to those types of things. So those are no-cost ways of doing it. If in addition to all those things, you're saying, let's have a mailing, we have 55,000 parcels, of which about 40,000 would be residential in nature. We have about 28,000, I believe, this year of getting the basic exemption. So those are owner-occupied homes. So to try to hit that many, by the time you have postage, printing, and so forth, it's probably something at least in the 60 to 90 cent per item cost to do that in addition to what we're doing. Right now, so far I've been looking at things that cost little or no money and doing that. Press releases, talking to realtors, other organizations, getting the word out those ways, or adding it into mailings that we're already doing and making people more aware of it in those types of no-cost ways, trying to have a fair and equitable means of doing it and minimize the loss through C of Es, which not only do we lose money there, every C of E requires clerk, treasurer, our office, in most cases the township office, and sometimes the state's attorney's office, all to be touching paper and doing those things. So it's consuming time on 200-300 pieces of paper that have to wander their way through all those offices.
Mr. Lear.
Thank you, Mr. Chairman. I understand Mr. Washington's remarks. I think he has a good point that we need to try to find as much consistency as we can. As this was brought before Community Services, there were no reports in terms of a number of individuals who acted in irresponsible ways in not filing the claims. Individuals who reported to the assessor's office, well, I've been out of the county, down in Florida, Texas for the last 6 months, so I didn't get around to filing anything. So it becomes a difficult balance to meet the needs of those who have some true needs, and we really do need to be sensitive to, and those who are just acting irresponsibly and costing the county significant funds. And so I think we need to be prepared to take a stand that makes sure that everyone is treated fairly, but we now allow people to irresponsibly avoid their responsibilities.
Would it be a good thing to move this to Community Services? Okay, let's get that on the agenda at Community Services. Let's hassle this out. Bring a recommendation back this, just a recommendation back this, okay, what the county. Moving forward, thank you, Steve. Moving forward, under our other business, elected official salaries. And there's been some movement here, there's some things going on, so we're going to look forward to some action on this today. I think every committee member got a email or some information as to what passed through the executive the other day. Did everyone get that information? Okay, so and I think there's been some other revisions. So now we're going to look for some discussion and some motions, and let's move this forward. Mr. Bosser.
Mr. Chairman, I take it you would prefer separate motions on each position. Now let's start out. I move that this is in compliance with the executive committee recommendation that the chairman compensation be set at $58,000 for the beginning December 08 and the $60,000 in beginning December 09, plus $2,500 each year for liquor commissioner compensation.
We have a motion on the floor. Mr. Pilecki with a second. Mr. Witt.
Number 10. Thank you, Chairman. In the executive meeting, I made a motion not for the chairman not to receive a commission as liquor commissioner, and it failed for lack of second. But on the county floor, I still will bring that up. I do not believe the county chairman needs that much money for a liquor commissioner.
Any more discussion? Mr. Scholl.
Yeah, thank you, Mr. Chairman. As far as the county chair, at this amount of money, I'm looking at it, and what goes through my mind is there's many people in a full-time job, they don't make this. The logic here is that I cannot support this unless we come to an understanding, or I have an understanding that we are gradually moving in the direction of a full-time chairman. So, I mean, if this is a part-time job at $58,000 a year, to me is outrageous. But if we are moving, and I think we need to, if we are moving in the direction of eventually creating a full-time county board position or a chairman position, then I could support this, if this is the direction we're moving. Otherwise, I find myself at a limit that I cannot support it.
I think my comments is that the job requires meeting with Will County, meeting with many officials, and promoting many of the ideas and things that this committee and then the full county board wish to take a direction. So I can understand the recommendation coming out of the executive, but it's before this committee, and I just know how many meetings that this job can require, and how many times he's on call to make different presentations in the best interest of the county. Yes, Mr. Schultz.
Yes, thank you, Mr. Chairman. I fully understand the position that you're taking, but what I'm saying is that we need the expectation here to exert the expectation that this is a minimum of 40-hour a week job, and exerting that expectation, then this is a reasonable set.
It'll be any other discussion? Mr. Legess.
Let's see, does he also get a car every year? Is it a new car every year? Is it an allowance every year? How does that work?
There's a car involved.
I mean, does he drive the car that until he wants to get a new one, or how is it set up? I mean, is there any guidelines, or is he just somebody just park a car out there and say, this is yours?
They're on a lease. I thought they're on a lease. I'm not sure. An answer to this. Go ahead, Mr. Schultz.
Mr. Chairman, wasn't the vehicles determined in an earlier period that's within the respective department's budget, and therefore it's within the administrative budget?
And another issue is we determined that in a comparison by paying mileage versus the use of the car, that I think Steve did a report on this and found that it was a lot cheaper for the county to provide a car to a few key officials versus the 48 cents a mile.
No, I'm not questioning that. I just wondered how the program worked. And let's face it, I'm sure the cars are being used in, their everyday driving too. I mean, I'm sure they're going to the grocery stores, going here, going there, going to the kids' games, all that kind of stuff. So, I mean, that has to be considered too as part of the salary, because that's a huge savings.
Mr. Stauffenberg.
I guess, is there any way of telling how many hours are put into this job? I mean, if everybody works a 40-hour week, that's 160 hours a month. We had 108 meetings, so if he attended all them, that'd be 108 hours at least, if not more. I mean, today we're getting the 2 hours here, so 160 hours. He probably puts in 40 with the meetings that he goes to and stuff. So I think we are leaning towards a full-time position. Probably, I would agree with Bob there, but I'd like to see that. We're thinking that the next chairman, whoever it may be, pretty much a full-time position.
Mr. Galecki.
One thing I'd like to point out too, one thing I'd like to point out too, and it's not necessarily just with the county chairman position, but it's with the circuit clerk, the coroner, the auditor, the recorder. If we are going to attract qualified individuals who we would want to do these jobs, we are going to have to pay them commensurate with what they could make in the private sector. And it seems to be that, you know, some of the gist I've got from the media is that, you know, we're, in the public sector, we're paying just so much more than what the private sector is making. I don't necessarily see that. So, I mean, if you're talking about getting a qualified, you know, individual in the recorder's office, the auditor's office, even the county coroner's office, I mean, it's gonna have to be a job that they're gonna want to go to, that they're gonna wanna leave the private sector where they probably are doing very well to come in and go into public service. So I'd just like to throw that out there, that I don't think that these salaries are incredibly unreasonable. And, you know, I know that we brought up the car situation earlier. I know that some of the people who have vehicles are very stringent on how they use it. They won't use it for personal purposes. If they're going to the grocery store or things like that, they take their own vehicles. I mean, I think we're nitpicking a little bit here. I don't see that as being an unreasonable salary for the work to put in.
Any other discussion? Mr. James? One second.
Thank you. One thing I'd like to point out here, you're talking, the one thing you haven't looked at is that the benefits that are received over and above the salary. And I'm going to tell you what they are across the board. They run about 25%. So when you're talking $60,000, you're really talking $75,000 in real dollars. That is above what the private sector is offering. And I will say one other thing. I don't believe that there's any, right now, we don't enjoy the best picture to the public, and we come out of a deficit. We're still at $175,000 deficit. We know we've got union contracts that are coming up that are going to bite us, and we know that although most of the country is in denial, we know for a fact that there's a real recession going on in Kankakee County. And if the cost is 3% that we can establish that the public is out there paying, then I think we should maintain the same level. And I don't know of any public official that's going to go on strike and refuse to take their name off the ballot if they should get less or more than 3% increase. That would be what the average is in the area. So I have trouble moving any direction at all on these $60,000. If that's going to freeze for the next 4 years, that's acceptable. But otherwise, I think those are some things we better take a long, hard look at, because everybody else out there that's paying the bill, the taxpayers, are taking a long, hard look at what we're doing.
Mr. Anfeld?
Mr. Chairman, Judge Erickson had to leave, and he asked that I just read a brief statement on behalf of him supporting this issue. He wanted to support the issue with regards to the salary increases that were originally proposed for the county officials. And I'm quoting here, regarding the coroner, he said, can there be a more stressful job in the county? And our coroner has developed this office in Kankakee County into one of the best in the state. With respect to the circuit clerk, she manages 44 employees. She's spread out through 5 locations in the courthouse, and she does an exceptional job, one that is of vital importance to the operation of the court system. And on a personal note, she's probably, or typically, the first to come into the office, and often the last to leave. That's Judge Erickson's comment.
Thank you. Mr. Lear.
Mr. Chairman, because this is public record, I think we need to remind the public that the proposal that's before us in terms of the county chairman has a salary that goes from $57,915 to $58,000. Now, my math is 2 point, but I think that's an $85 increase the first year, and then it's a $2,000 increase the second year. So if you talk about it being a 3.5% or 3.31% increase in the second year, you've really frozen the first year. I would say it's really about a 1.5% increase for the county chairman. I'm not exactly sure why we're concerned about this particular increase. It's a very small increase.
Thank you. Any other comments or questions? Now we'll go to a vote. I'm trying to keep the thing moving.
What are we voting?